What is up, everyone? Hope someone out there had a good trading day. As you can see with my account here, I've got bludgeoned again, down 5.85%, which is over 1,500 during trading hours, and then another $123 down for the day. So overall, down pretty much a lot. For the week, down 9.27%, and then for the month it says negative 7.6, but if you calculate it at my high, it's closer to 12%. Anyway, so I wanted to do this video on how do you survive, what are the keys to surviving this market sell-off. So like I said in my previous video, there was a similar sell-off around January, February, and there were some lessons I learned then, and I want to talk about these 3 keys that I think served me well back then and I think would serve you all well today. So let's get into it right now. So key number 1 is to not get emotional, right? So I know it's a pain and it hurts to check your account and you're just seeing red, down 2%, 3%, 4%, it just keeps going down. As you can see from my account, it is going down but a lot. But don't get emotional, don't do anything rash, make very informed decisions, right? And I talk about this because I have a friend that we talk about stocks a lot, and then was saying that he's going to sell all his stocks and pay off his mortgage, and not pay off his mortgage, use it towards paying his mortgage, and he's going to get out of the stock market right now, right? Which he would obviously be losing quite a chunk of change because he, over the last 2 weeks, he's also lost a ton of money. And I was like, well, that's your decision, right? It's your money. You definitely make whatever decision you want to make. But in my opinion, jumping out right now just because you're seeing some reds is getting a little bit too emotional. Like if you want to pull your money out, have it be an informed decision. There's a reason why you want to do it. If you're seeing better options elsewhere, make that decision, but don't just jump into it just because you're tired of the market fluctuality and you're just scared of everything. So don't get emotional. That's number 1, right? Number 2 right here is, my second key is stick to your numbers. So what I mean here is really, you should have been doing your research and in buying the stocks that you bought to begin with, right? So stick to those numbers again. There's a reason why you like those stocks to begin with, and revisit those numbers. Does the stock still look attractive? What are the reasons it looks attractive, right? For me, I'm looking at the numbers on certain companies, and I see, even though it's a sell-off right now, the stock still looks attractive, and I see a lot of buying opportunities, not selling opportunities, right? So I'm not getting emotional. I'm not selling, making rash decisions. I'm trying to make decisions what can I do to add to my portfolio, utilize this time of the sell-off to get greater gains, right? So stick to your numbers, stick to how you go about purchasing stocks, selling stocks, and don't get emotional, and don't just make judgments because now things are just going haywire and you're just throwing in the towel, right? So stick to your numbers, stick to what has been working for you is my second key. And my third key here is it is okay to sit and wait it out, right? So if it is too much and you can't handle the ups and downs and you continue to see the stock market go down, it is totally okay to just pull your money out or don't put any more money in and sit and wait to see what happens, right? And at some point, if the market recovers the next day or the next day, you might miss out on some minor gains, but it is okay to also sit and wait, right? If you don't know when is the bottom, it's totally okay to sit and wait. Again, it's your money. You want to make whatever decision you want to make, and you don't have to be forced into I have this money, I should invest in it somewhere. Where I'm going to put it is totally, if you're not uncomfortable, sit and wait. So those are my 3 keys to surviving a sell-off market, and I think it'll help you out in the long run, right? So I'm also going to throw in a bonus tip, and this is one tip. Again, this is for me. I'm not a stock market professional. I'm not a financial advisor. This is what I plan to do. Just throwing it out there so you guys know what, maybe you want to try this strategy. But one bonus tip is I've been looking at right here, call options of premium stocks, right? Stocks that normally are very hot and very sought after. Obviously, with the sell-off, all the stocks are going down, right? So, and you can do this besides call options by just buying those stocks in general. But I'm very much looking at the call options of premium stocks. So let's go into an example of what exactly I'm talking about, because I see, if I again go by this philosophy of long-term investment down the road, would these premium, the belief that these stocks will recover down the road, and this is only a blip in the short term being, right now we're getting a lot of discounts, especially on the options contract. So again, let me show you what exactly I'm talking about. So again, here's my account. If I can log in. Okay, there you go, I'm in. Right, doesn't look pretty, down 1,500 in one day. But if I go to, and I was going to look at, or I was looking earlier, SPY, again, which is an ETF. Here we go. But let's look at, so in total today, they lost $9, 3.17% for today. Then they lost another $1.65 in after hours, right? Still trading at $276.65. For the week, they're down a little under 5%. For the month, 3.74%. 3 months, almost breaking even. And in the year, they're positive 10%, right, with this blip. So I think this ETF is a really good one to buy into right now. I might buy the ETF itself just because of its good value for me. But let's look at exactly what I'm talking about with the options contract. So let's go here, trade options. And I'm not looking into like next week, obviously. Like, you can see how far down these contracts have dropped. Definitely not looking for in a week of them making recoveries. I'm looking a little further down. Let's towards the end of the year, after earnings seasons, which I believe after the holidays, I believe the market is going to pick back up again, right? So let's look at this January 2019. All right, a lot of these are down 30%. So right now it's currently trading at $276, and these contracts are $11, $10, kind of a lot, right? Which I forgot to do this. So before it dropped, right, within the last month, it was trading around 291, right? So now let's go back to the option contract, because I want to use that figure in my mind when I think about this. $291. So let's go back to that January. Right, January 18th, 291. Boom, around 291. Right now, it has dropped $53% from today. And if you were to purchase this contract, it will cost you $291. So the price of one share, you can also buy a contract, right? So the price of one contract, is for $291. And if you purchase this contract, put it right here, $291. You say by January 18, 2019, will the price of this ETF go back to $291? I actually think it will. There's a couple of reasons that make me think about this. One is right now the implied volatility is very low. Here, 13%, which you always want to be on the right side of the implied volatility. If it's low, it's good times to buy, because when it spikes up higher, that means you're going to make more money in the long run, right? So the break-even price here is $293, and it says here your chance of profit is only $19.79. But I think this one is a really interesting option to buy because of its loss within the past couple of days of the sell-off. Again, the sell-off, member, is being triggered by the interest rate hikes, people purchasing into the bond market, cashing in what they've learned. They've got in the stock market. But I think with the earnings season, people are going to start putting the money back into it. So this contract is very attractive, in my opinion, that I might purchase a few of these. So that is just my tip. Again, you can either purchase the contract, which consists of 100 shares, or you can just purchase the ETF outright, which is a little bit different. So not going to try to make this video too long, but that is just my bonus tip and something I'm thinking about doing, and I probably will plan to do. Just want to know what other people are planning to do. What keys do they have to survive in this market sell-off? Please put your comments below. If you enjoyed the video, please like, share, and subscribe.